Good afternoon, everyone. Welcome to the next webinar. Today we have Sasha Mirchandani, a great investor in Mumbai, and I know most of you know him. And by the way of his introduction, I think most of you know that he was the founder of Mumbai Angels. He also was on TiE Mumbai board for a long time, a couple of years ago. He runs his family investment office called TiE Capital, and where they've done some very interesting investments. Just to show you some of the investments, Rahul, can you just show me the presentation? Well, we've just captured from 2019 what investments Sasha and his company have done, his organization, which kind of give you an idea of how forward his investment thesis is, some of the smart companies that they've invested in. And some of his previous investments in terms of big names are these guys that you would pretty much recognize: Healthcard, InMobi, and Myntra.com. We will start off today's session with an opening few remarks by Sasha on the current times and his opinion on what things are at the moment and what entrepreneurs need to do. We would then go into the Ask Me Anything part, where I would request all entrepreneurs to then start asking questions. I know you are eager to start asking your questions right away, but I think let's give Sasha the first 15, 20 minutes. He's got a small presentation and he has captured some good points. So over to you, Sasha, and take it from here.
So thank you, Naveen, and thank you, TiE, for this invite. It's always a pleasure to be invited by TiE. I know what TiE has done for the ecosystem over the years, and I really commend what the effort that every one of you has done over the years. And my time with TiE has been super productive. So thank you very much for this invite. Obviously, these are very tough times for everyone, but we all have to move forward, right? Instead of moving backward. And the game is whoever moves forward wins in life. So what I thought, ladies and gentlemen, is that I'll just put together 5 or 6 short slides. So if you can bear with me, I'll just go through them as fast as possible. And then any questions you all have, if at all, I'll be happy to try to attempt to answer them. Is that fine, Naveen?
Absolutely, Sasha.
So Rahul, if you could just put up the screen, I'll just go through one by one onto what I wanted to discuss today. So folks, I think everyone will agree that this is a new world, a new reality. So my presentation is going to talk about navigating a new reality in the post-COVID world. Rahul, can you go to the next slide, please? So what happened, folks, is end February, early March is when we were doing our annual day with our investors at K Capital. And we started getting signals from China that the situation was pretty grim. I remember March 6th was the day for our annual day. And we decided that we needed to move very, very fast with our portfolio companies because the situation was looking grim, but we felt it could be worse than people thought. So we said, what's the most important thing that a company needs? And the company needs cash, as everyone would agree on this call. And the question we asked ourselves is, do you have enough cash? Are you in a cash constrained situation? And the answer is no, which is great news. The question was, are you in a contribution margin positive business? If no, then let's improve the unit economics of the business. And this is how we going back. If you are yes, the answer is yes, then find ways to get to CAC LTV payback in 3 to 6 months. So this is on the left quadrant, right? If the answer is no, you're not cash constrained, then this is the way we want to play the playbook. Now the question is, if you are yes, which a majority of companies are, right, cash constrained, do you have enough cash to become profitable? If the answer is no, then we have to reduce burn. So we thought a lot about how much burn should we reduce, and we came up with the answer that every company should have minimum 18 months of cash. So that became the mantra for us. You must have 18 months of cash. And the whole focus for the last 15 days was, in our entire portfolio, how do you get to 18 months of cash? How do you cut costs? How do you raise capital? How do you defer stuff? Whatever it takes to get to 18 months of cash, because the vaccine is going to take a while to come, minimum 12 months, and then it takes several months after that for it to get into full-scale production. And we felt 18. Frankly, it could be even as high as 24 months, but we felt at least let's start with 18. But the reality is that we're now going to be pushing probably for 24 months because there's too much flux. So right now I've written 18 months on the slide, but the way we're going to do it is move our companies to a 24-month window. So that will change next time I make this presentation. Rahul, can you go to the next slide, please? So again, let me repeat, survive, survive, survive. how can you survive? Understand your cash position and extend the runway. Simple as that. Hope is not a strategy. A lot of people start thinking, in mid-March, even in April, that things should change. We'll stick on to it and we'll figure out things. It has to come back. And I think that's not a strategy. Unfortunately, we have some companies in our portfolio which are still hoping. And that's not a good situation to be in, because hope is not a strategy. You have to move yourself. Nobody's going to help you. The next point was daily communications, over communicate. So this is another thing we worked with our portfolio quite aggressively, saying, hey folks, we have to over communicate. And what does that mean? If it has to be daily calls with your team, for example, at K Capital, we do twice a week, twice a day. So morning 30 minutes, evening 30 minutes, 6 days a week if required, 5 days a week. With our larger companies where there's thousands of employees, some of them 2,000 to 3,000 people, we're doing weekly communication. Some of them are doing twice a week with every single person in the company. Point being, we need to over communicate in these times because everyone's working at home, everyone's miserable, and a lot of companies only work with the senior management, top 5, 10 people. And the rest of the teams were kind of sitting around saying, but what's going on in the company? So our role was to convince entrepreneurs that they need to over communicate and communicate with everyone. This means with all your stakeholders, with your investors. So for example, at K, we've done several calls with our investors in the last 40 days, much more than we would do in a 6-month window also, where we've been over communicating with them about where K stands, what our strategy is post-COVID, and how are we executing on that strategy. Stress test the company. We talked about that. Have a cash floor, which we can talk about later. And another important thing, unfortunately, the situation has been pretty bad for a lot of people. People have lost jobs. And the only thing we told our founders is, if you have to make layoffs, that's your choice. Make them deep and quick. A lot of entrepreneurs, they feel the time things will change. So they fire 5 people. Then after 3 weeks, they fire another 7 people. So what then happens is the people staying back are always on tenterhooks. And they're not sure as to when they will get fired. They may never get fired because you may really find them to be useful, but they don't know, right? So the whole company is sitting in a situation of flux. And so what our feedback to these young entrepreneurs and even senior entrepreneurs was, if you have to make the layoffs, make them deep and quick. Can we go to the next slide, please? Now, we talked about layoffs, and now I'm talking about hire opportunistically. But what my history teaches me since 2001, when I've been investing, is, if you go back to the last slide. Yeah. History teaches me, folks, is that this is actually a great time to get super talent that may not join your company in normal times, but this is a great time to hire opportunistically. And if I go back and see some of the best companies we funded, some of the best hires they've actually made have been in downturns, like this situation that we're all going through right now. So my advice would be to look around opportunistically for some really, really good talent that will probably join your company right now. And then the point is to hold on to them post-COVID, where they actually thrive and take your company to the next level. Move fixed cost to variable. And I think this is another very important point, because a lot of our companies have so many fixed costs that no matter what we want to do, we feel jammed. And therefore, what we've been encouraging our founders is try your best to get your business to as much as variable as possible. So God forbid the next time we have a situation like this, could be anything, any disruption. When you have variable costs, you can cut costs much faster for obvious reasons. So move as much as you can to variable. Then don't cut muscle, just fat. A lot of times people cut out muscle, which means the key parts of your company, because in panic, saying, look, I just have to cut costs. But building that muscle back is very, very difficult. Most companies, no matter how well run, have fat. So my advice would be to knock off the fat and keep the muscle. Now, God forbid, if you're still losing money after removing the fat, then of course you have no choice. You may have to cut some muscle. But first, focus on the fat. Categories that have exploded, you guys are all consumers, you know what is working, what is not, so I won't bore you, but anything that you can, service at home, the customer at home, has exploded. So for example, we have a company called 1MG, it's an online pharmacy. Nobody wants to go out and buy pharmaceuticals, right? When you can just go online and buy it. And therefore, numbers of companies like that have really exploded. We have a company called Visa, it's a mental health chat bot. There's a lot of stress right now in the system. People are feeling stressed out, lonely. That company is doing really well as an example. Generally what happens is demand moves to adjacent opportunities. So example, sports consumers, a lot of you are sports consumers, I'm sure, have gotten frustrated and now have started moving to, say, gaming. Maybe you would not have been a gamer or have moved to the gaming space, but now that you're desperate, you're saying, let me check out gaming. So there's a great chance for gaming companies to take advantage offline to online, ed tech. You see companies like Byju's, etc., doing phenomenally well, right? Phenomenally well. Education moves online, right? So that's a huge opportunity. So if you are in these categories, good luck to you. Your businesses are probably doing very, very well. Next slide, please. This is again very important. This, I was talking to some Chinese VC friends of mine who have funded very, very large Chinese companies. And this is an experiment they tried in China and it worked really well. Very hard to do, but it's really working right now. Is you have 1,000 people and the game is, can you make do with 500? And initially it sounds impossible to say, look, I really need this person, I really need him, I really need her. But the bottom line is, what they did was they forced the use of this situation where they said, okay, if you have one person, can you work with 0.5? And we tried it with a few of our companies, and you'll be surprised, ladies and gentlemen, that it actually worked. Where we had one company with 963 people, if I remember, and it's down to 510, something like that. I mean, these are random numbers. So almost 50% reduction in that company. Now you can imagine that company's profitability going forward, the unit economics, the entire business. So this is possible. It's tough, but it is possible to do this and make your business more lean and mean. This is another suggestion is, when the layoffs happen, obviously nobody is happy making layoffs. Nobody wants to do that. But one of the things that has worked for our portfolio companies, some of them at least, is 2x formula. So you go to the employee and tell them, look, I'm sorry, you got to go. In the sense that we don't want everyone to stay in the company. We don't want to fire anyone. But if you're voluntarily willing to give up some cash, we'll give you 2x of that in equity or carry. So, obviously most people have equity, which is a regular company. And I would say 2x. And that has worked quite well. So something for some of you to think about doing it. So people feel that they've contributed back to the company. They're still held on to their jobs. The company gets the extra cash. And a good way for the employee to make some money by getting that extra equity in the company. Company bonding like virtual lunches. So we do virtual lunches in K Capital every week with our investment teams, back office team. And it's just a way for people to be normal again, right? Because everyone had lunches when they were in the regular offices with each other. But this has been a situation where we all stuck at home for the last 2 months. So this is another way. I'm sure many of you are already doing it. If you're not, worth an experiment. It's worked very well for us at least. Speak to your best customers. I mentioned that at the beginning of the talk. We've over-communicated with our best customers. We've been talking to them as often as possible. We've been talking to our companies. We've been talking to our investors. And I'd encourage the same. Sometimes people get scared saying, the situation is so bad, what do we do? But sometimes you tell them the bad news too. They understand. Everyone understands. So I would encourage just over-communicate even with your customers. And then the question to ask yourself is, what will drive growth even in a time of fear? And we've asked this question to several of our portfolio companies. And I'm very happy to say that several of them, after initially being very reluctant to even think of answering this question, have now started thinking along these lines and have now started even executing around these lines and actually creating business ideas post-COVID, just answering this simple question. So this question is something for you folks to think about if interested. Next slide. I'm very passionate about this next line, right? Smarts and motivation don't punch a clock. And a lot of times in companies around the world, you come in the morning as an employee, you punch a clock. And I believe that those days are over. If you're really a smart and motivated person, you don't need to punch a clock. And the people on this call who are in that profile would agree with me that, look, I come to work to fulfill something for myself. Of course, I want a paycheck, but I don't need a clock to prove myself. I may come an hour late, we may come an hour later, it doesn't matter. So let go of the concept of the 9 to 5 workday or the idea that your people necessarily need to be working from wherever they are. This has worked really well for, I'm sure, many people in this call, where 50 days back they may have felt that it's impossible, but actually it's working really well. And I think we have decided that for us, there's no clocks. We believe in hiring smart and motivated people and letting them do their stuff. And it's worked miracles for us at least. Also, God forbid, if you are firing people, do it humanely, do it fairly, because the people who do stay back, they always will remember how their colleagues were treated. And we've seen companies where they don't do this properly, and that comes back to bite them. So something to think about is to do it humanely. If you have to give a little extra time to the employee, whatever needs to be done within your control, I would encourage you to consider. And also keep your people learning when you go virtual, which is what we are doing, right? So we are keeping our teams and our portfolio companies as well very, very focused on learning new things, whether it be small skills, whatever. Just keep them learning, because what happens is a lot of times you go into defense mode in these environments, and the game is How can you be in offense mode, keep your mind active? So we keep certain days of the week where we're actually doing core work for the firm, but then we actually take out half a day where we say, what are we going to learn? Obviously, the learning has to benefit, hopefully, K Capital or our portfolio companies. So what is that you can learn? And we've already done several such initiatives that we feel have been beneficial to our teams and hopefully to our entrepreneurial companies that we fund. Next slide. Is there any other slides? Loneliness. I talked about Visa, our portfolio company. First, extroverts suffer. However, long term, everyone suffers. I'm sure a lot of people in this call may be lonely. I hope not too many, but there must be lonely people on this call. And the whole idea is you must acknowledge the stress and anxiety of the employee, but also provide an affirmation of your confidence in them, right? Many of you are CEOs of your own companies, and if you don't show the confidence in the employee, who will do that for you, right? So the key is to find ways to make sure every single person on the team feels like they have a challenge. It could be a small, if you run a retail store, to just better greet customers and say, let's improve that and really mean it and really improve the process. Or it could be a big strategic move like Nordstrom in the US, large department store, has gone online, which is unthinkable. Nordstrom, I grew up in the US, was a huge, huge department store. And for me to think that Nordstrom would be an online-only business is unthinkable. But they did it. They moved online only. So that's obviously a bigger initiative. But for the people involved in the handshaking or the Nordstrom, for them it was a big deal. So the idea is keep them focused on making positive moves like what has happened in these two examples. Next slide. Okay, that's the end of the slideshow. Sorry it took longer than expected, and I'm happy to answer questions if they are. And I hope I didn't lecture too much. The point is not to lecture, but the idea was to give examples of what we have done. And if there's any interest, happy to answer questions.
Thanks, Sasha. That was really great. I think that also kind of gave us a perspective of how we've been thinking on things. We've got a few questions which was sent to us at the time of registration. And I think I'll pick up the most favorite one, which is the leading and trending topic, which is on the funding related one, which all entrepreneurs want to know. And I think the first question is they want to understand, has your organization's funding philosophy changed now? And what does that change mean? And what are the metrics now that you've started looking at, say maybe for the short term, medium term, and long term?
So the answer is for the last month and a half or two, I would say about 90% of our time was focused on the portfolio, right? Normally we will see, I don't know how many deals per week, but that number had shrunk quite a bit because we were not even looking, because our focus has to be on the entrepreneurs that we fund, right? Those are our family. If we can't help them now, then when will we help them? Absolutely. And so I would say that was the same thing for most VC funds. Very few would have been spending more than 5 or 10% on new deals. Having said that, we are still spending, I'd say, about 70 to 80% on our portfolio right now, but I'd say about 20% has now started shifted to new deals, right? Because there are so many entrepreneurs out there, and our whole purpose is to fund new companies, right? Mm-hmm. And I would say that our first investment from our new fund, K3, which is not even ready, is probably going to come out of this post-COVID, because I always believe that downturns, and I'm sure everyone said this, but I have to repeat the same, so apologies, are the best time to invest. If you don't invest now, then when will you invest? So we've already put in a term sheet for the first deal, and it's not yet closed. But if it does close, that'll be our first deal from K3. So we've started investing. To your point about short-term, mid-term, we're only long-term, boss. We're 12-year funds. So if we believe in a business for the next 10, 12 years, which is very long-term, the 1 year is irrelevant to us. That's the point.
So entrepreneurs can still write to K Capital and send you pitch decks and everything.
Yeah, of course. That's our job.
And has your interest in the sectors that you were looking changed a bit? Is medtech and edutech suddenly the flavor of the day?
Yeah, I mean, frankly, edtech and healthtech and edutech were in our radar anyway. Because in India, you tell me which sector is not penetrated. I mean, the penetration levels are so low in every category. You see the companies we talked about. We've done so many health tech companies over the years. 1MG, HealthCard. We have fast-growing companies like Visa, Xyla. We're all health tech. EdTech, I can go through a list. Hello English. So we have several companies already. It just maybe speeds up sometimes the situation.
Okay, great. So I've got a couple of questions, but I'll come to one which is, I think, relevant to the presentation which you just made. So Gopal wants to know, can you explain how a stress test is done? If you could just give a an overall view of how one entrepreneur should look at his company and do a stress test?
I mean, the stress test is focused primarily on cash
Okay.
first, right?
Hmm.
Cash is pretty simple, right? Do I have it or not? I'm burning X. I know I don't have it. I'm burning Y. I'll have it. So if you
Okay.
work backwards on the cash part, half the stress is over when the cash is there, right? After which you can do many other things. But
Cool.
without the cash, that's your oxygen. You have no business.
Yeah.
So for us, it was all about, and a lot of our companies are very small, right? Very, very small. They're like 5 crores in the bank. And we're saying, how would 5 crores last 18 months? And it can last. It can definitely last. But the idea is it was burning, say, 60 lakhs a month. Now can it burn 20 or 30 lakhs a month? And the answer is hell yes, it's possible.
Cool.
People are cutting their salaries, doing what they have to do. Many companies say, no, we won't fire people. On the other hand, we had companies with $20 million or more, and they didn't have 18 months, but they were burning so much, right?
Got
So then they had to back off and say, hold on, I need to raise more capital. And we were lucky enough to raise reasonable rounds from companies in our portfolio, even post-COVID, because some of them were high quality. They got large checks of 200 crores. Maybe one got 150 crores in post-COVID. So that was the situation.
And then, your point on online gaming, must be getting more and more consumers now. There's a question on, do you see that changing for Nazara Technologies?
I can't comment. That's a public company. I'm an independent director.
Okay.
And it's already doing well, the company, and I'm sure it'll continue doing better with this situation. But because being a public business, I mean, it's not a public. I take my words back. It's a potentially public company, but I'm an independent director, so I'd rather not comment. I'm
Got
an
it.
independent director.
Got it.
It's not my portfolio company.
Yeah, we'll respect that. And
Yeah.
so, Sasha, next set of questions which I want to ask you is, which also is the kind of questions that people are asking, but I'm going to morph it into this form, is have you seen some interesting pivots in your portfolio companies? And if you could share a few examples of what people have done quickly, what have they done to adjust to?
Yeah. So many pivots. Not surprisingly, not now. Most of the business models are still holding up even post-COVID. So I
Okay.
can't think of a single pivot in the last 2 months. But if I go back in time, the first investment I ever made was a dot-com company in 2001, and it was a comparison website. And we eventually pivoted to analytics, and that's a company called Fractal Analytics now.
Yeah.
And last year we raised $200 million from Apex for that company. So that's as dramatic as it gets, right? You were a dot-com business, and now you're fastest growing analytics company out of India with a whole bunch of US and European customers doing touchwood phenomenally well.
Mm-hmm.
Or when we funded Mintra, it was a cafe press for India, and then it eventually pivoted to online apparel, and the rest is history. It became a huge company. Or when we did InMobi, it was mobile search, then it's a couple of other pivots, eventually became mobile advertising to become what it is today. So I can go through many more examples, but we've gone through many pivots. The learning there is the founders were very quick to pivot, extremely quick. Naveen must have made 3 or 4 pivots in 1 year. Where founders fail is that they fall in love with the business, and then when their cash is almost over, they say, "Oh, maybe we should have changed. Now let's change." By which time it's too late, and they run out of cash.
Got it.
So, like even Fractal, they'd only burnt maybe 20 lakhs or 30 lakhs, and we realized it's not working, and then we changed it. So that's something that if you truly believe is not working, there's no harm in stopping. The game is not to pivot while you're still working, but to stop. And by then, like for example, all these companies where we funded, we really like the founders. So we say, we trust you. Now we know you, because before funding, we didn't know you, but we like you so much, we know you will do something, but you can't do it on a treadmill. So stop the treadmill, think, build a new plan. We're going nowhere. Your money is with you, but the plan should make sense for us and for you. You should believe you can make a go of the second plan, or the third, or the fourth. And that's what happened every time. When we done it while it was on production, those never work.
Got it. Uh, Again, taking a segue into e-commerce, there's been a question that has been asked as to how do you future-proof or post-COVID-proof e-commerce companies? Any thoughts on that?
Well, frankly, you can't future-proof any company, right? It's impossible to answer this question. I mean, I wish I could answer it. Can't future-proof any business that we are involved in. But e-commerce is going to be massive. Anyone in the e-commerce business is not. Uh, there's a data point for the person who asked the question that e-commerce in any country explodes when GDP touches $4,000 per person. In India, as you know, most people know this is 2,000. So you can imagine the headroom for e-commerce business in our country. We have to double GDP for it to explode. So there's massive opportunity. So as long as you're an entrepreneur who can hang on, you will be in for a ride of a lifetime.
Excellent. So, Sasha, there was an excellent what to say. I mean, a couple of months ago, you did a session with us in uh, at Nishit Desai's office, where you made the statement, which is like an alarming thing for all of us, and we went back with that statement, which said, "Culture eats strategy for business any day." Could you elaborate on that? And would today's survival beat the culture, or you see things changing?
Yeah, I think I'm sure many people will agree with me. This is very, very important because culture is something that people don't understand. If you really get your culture right, and obviously get the right people, that culture creates success, right? And a lot of times we don't think of culture, it's more mumbo jumbo and like, what does this really mean? And I've seen the companies in our portfolio that have really taken culture very seriously and actually living by that motto, where you actually live by it. And that's how people respect the culture and say, yes, this is something, even in tough times, including in COVID. Those are the companies that win, and where the management and founders get credibility from the rest of the team and from investors saying you actually practice what you preached. And you actually preach it in tough times, not in easy times. But it definitely is without doubt the most important thing.
And do you see it holding true for these times as well?
Yes, for sure, even more so. Like I said, even in fact, in tough times, true cultures come out because all the big talk goes out of the gutter in tough times, right? For most people. But the people who can hang on, like for example, I was reading an article about Patagonia this morning, and they said we will be the last to shut our shops, open our shops. So while everyone was rushed to open shops in the US, Patagonia said for us, our people are more important than profits. So they're actually holding on because if everyone else is open their stores, Patagonia should do so, right? But the fact that they told their people that you're more important, doesn't that prove to the people in Patagonia that their lives more important than like death? Where even Trump is sending his people to go to work, but Patagonia is not doing that. So I feel Patagonia is a company that I would want to work for if I wanted to take a job in that sector.
Excellent. There's a question from Yagnesh of 100x where he's asked you a two-part question, and I'll ask the second part first. Do you see, or are you expecting lower valuation multiples to be the new normal?
Yes and no. There'll always be a situation where people want to take advantages of the situation now and get lower valuation, etc. But at least the companies we are talking to, we are paying valuations we think are reasonably fair. I would say maybe a little notch below what happened, say 4 or 5 months back pre-WeWork, where the market was at peak and a little bit insane. So it's come down a little bit, but not that much because the whole point is we're going after high quality companies. So for a really high quality company, you end up paying in good or bad times. That's the way I've seen my life. For an average company, you'll pay high, low, you get a lower price. So what? That's average company. Do you want to fund the best? Or you want to fund average? I want to fund the best. I have to pay, I'll pay.
And what are the sectors that you're keen to invest in as an organization?
So, we pick themes and we stick to those themes for a period of time and then we expand the theme. So right now we're looking at logistics, we're looking at edtech, we're looking at fintech, we're looking at gaming. We're also looking a lot of it at B2B commerce. One of my partners has been spending a lot of his time. SaaS, we've done a lot of SaaS companies, they're doing very well, touch wood. And therefore we definitely continue doing SaaS. And so our idea is to have 80% of our time focused on a few categories and 20% will be opportunistic. So any other category goes into the opportunistic bucket. So we won't say no to it, but we may take a little longer to do diligence on that category versus just jumping in and doing a deal quicker. Everything is relative in the opportunistic bucket.
Got it. And we have the famous Jayesh Bhai or Jayesh Parekh from Singapore asking you, has the LP expectations been fine-tuned or recalibrated?
Jayesh Bhai, how are you, sir? Jayesh Bhai is a legend, so I'm happy that he's taken out his time to join this call. Yes, LPs, I think, do understand Jayesh Bhai. And we've been doing calls with them over the last couple of weeks, as I mentioned. They are quite happy with the fact that we have told them the truth about our portfolio and where things stand. And they feel that this communication with them has been very helpful to understand going forward what's going to happen with our portfolio companies. So I feel this good communication has really helped us. And we told them the truth about where we stand. And I'd say about 70% of our portfolio has now, I can say we are cautiously optimistic post-COVID because 70% of the K portfolio now has 18 months of cash. So that was obviously a lower figure 45 days back. And we like to get it higher and we're working on that. The reality is maybe 80, 85 at best. It will never be 100. But good LPs understand that these are exceptional times and they want to support us. So hopefully that will continue.
And a very interesting question. Are you looking at agri-tech?
Yes. So in fact, we really liked a deal. It could have been our first deal from K1, K3, agri-tech opportunity. Very, very good. Everything was great. But at the last minute, we backed off. It's a long story. But we wish that entrepreneur very, very well. And I'm sure he will do very well, him and his co-founder. But the answer is yes. It could have been our very first deal from K3. So we think agri-tech is, the time has come, actually. I didn't mention that earlier. It's a huge opportunity. We're getting world-class entrepreneurs get into agri-tech.
And how do you see that segment growing, Sasha?
It's actually, if you ask me, it's the most underpenetrated. There's plethora of opportunities, but you need world-class entrepreneurs. Very, very hard. You need truly the best to really get their hands dirty and get into the fields and get this done. I mean, not necessarily into the fields. You get my point. It's tough, but the quality of entrepreneurs that we had looked at, that particular deal, was at that highest level of what we've ever funded. And so, point being, when you go after a hard problem, you send awesome people. Those are the people who crack it, obviously, right? So we're confident you'll see some huge companies come from agri-tech.
And your take on the food and beverage entrepreneurs and food tech and what's going to happen to this space, restaurants and...
Well, I won't say restaurants because that's different from food, because food is, consumer. Correct. And I think that is different because you can FMCG, you can still buy it, you can go online and buy it and stuff. So that's still going to remain a massive opportunity going forward. In fact, we are looking at some food deals as we speak. And there's a good chance over the next month or two, we may even pull the trigger on one of them. Very high quality entrepreneurs in that space. So, and I think that game's not even started there. As far as restaurants, we don't fund restaurants. I don't want to comment, but it's really sad as to what's happening with restaurants. Everyone knows, right? By the time these poor restaurants open, by the time they get people like you and me to feel comfortable to go, even if we go, there'll be occupancies will be half. Then they can't even let people in. That's going to be a sector that's really going to struggle for a while. And I would wish all restaurant entrepreneurs best of luck. I know you guys, whoever on this call, if you're a restaurant entrepreneur, I know you have the wherewithal to survive and you need that wherewithal. But it's going to be tough times for a while.
I think they need to move to a takeaway format, and also if a drive-through format can be adopted, where you order and you go and pick it up from the window, like your McDonald's drive-through. I think these are a few maybe short-term pivots that they can try.
Yeah, maybe. I mean, I'm not trying to be a restaurant entrepreneur and give feedback, but you're right on some of those points for sure. There's logical points, but it still be very tough, right? Because we're used to a certain way of life, and it's a pivot of pivots. But
sorry, there's been a question on the size of investments that you do.
So we write the first $1 million, and then we can write up to about 3 to 5 million in the life of the company. Generally up to 3 million, but we can go to 5 because we got an annex fund that can put a couple million. Then you can actually go more than that as well. But generally, first million, say 5 crore, if I talk in rupees, 5 to 7 crores. Then another million or two in Series A, and then Series B, another million or two. So 3-4 million is what we like to do. But we like to come in first as the first institutional investor. We're quite happy to partner with other high quality VCs, but we want to be in the beginning. That's our business model.
So you basically want to be there when the entrepreneur is just thinking through his company and grow along with
it. Maybe they started, maybe a few months of whatever they're doing, good enough to have a look. And if the founder's got a lot of experience, we can even do it on laptop.
Perfect. There's one question from Kapil about how investors make money, but I think that's a session tomorrow, Kapil. Anand Lunia is doing a session on valuation and funding. Join us for that session.
Yeah, Anand's a great speaker, so please do join the call.
He will explain to you how this whole thing works. There's a question on what's the mood of Chinese LPs and investors towards India right now?
I mean, they are very keen on India because India is a huge market, but as you know, the government has created some rules and regulations. So we're working around that. We meaning they are working around it. They all have all the expertise to check and see what's happening. And I'm sure the Indian government understands that Chinese money is very important because we need it right now. Because we don't have enough money in our own country to support all the entrepreneurs. So Chinese money, in my view, is very, very important. And I'm sure that as things cool down, there will be some relaxation with maybe some rules. But I feel that's very, very good chances of that happening over the next few weeks and months.
Next question is, do you see sports tech evolving?
Yeah, we've seen some very interesting companies. We haven't pulled the trigger, But even the companies we missed doing, I'm sure they will do very well. So there's a lot of opportunity.
And there's a question on consumer internet companies, where volumes is a big thing. Do you see the investors' approach on this if the volumes are not there so much? Do you
Again, it's difficult to answer the question because it depends on the company and the thinking of the entrepreneur. So we go with what is the founder thinking of before jumping to conclusion on whether we need to get to profit or not. But I think post WeWork, the world has moved from blitz scaling to really getting to unit economics.
Okay.
That doesn't mean you don't blitz scale and you just go slow and only make profit, because there has to be a fine line. But say you have a network effect business, can you at least be the leader among the companies that are network effects in the category you're after, so that eventually you're the last man standing, but you don't go rampant by throwing hundreds of millions of dollars behind that company. So that thinking has changed, because otherwise you see the reality of private company valuation versus public company valuation. There's a huge gap. Casper listed at 1.2 billion, and now it's a 300 million company. So that becomes a huge problem for shareholders when they buy public companies. And now going forward, they won't tolerate that. So private market investors have to understand that, because they won't be allowed to go public otherwise. And that's something that is a new normal.
True. Next question is on renewable energy, EVs, clean tech. How is this space going to evolve post-COVID?
Again, massive opportunity, lots of clarity required from government. Government's been making a good effort. You had many ministers, including, I forgot the minister's name, who's made a huge effort on EVs to really get this into mainstream. But I feel that, yes, it will come, but it'll probably take a while. And our firm is capital efficient. We end up funding, as I mentioned, small checks, a couple of $1 million, which doesn't move the needle for categories like this, like EV, etc. So even though we have a strong interest in it, we believe India needs it and will get it, we have really shied away from most such investments.
And I think it's more a private equity play than a VC play.
That's right. Or you can even be a larger VC or a growth fund and participate in the early rounds. But for seed funds, generally, no. Generally.
Your thoughts on the fintech space?
So fintech is going through some pain, as I'm sure many founders know, for many reasons. But fintech, again, is a massive opportunity. Again, there's a broad brush. Again, like I said, you can't have a business model that is just growing and growing and growing and there's no path to profit. But there's some phenomenally well-run fintech companies in India with some outstanding entrepreneurs. They may go through some temporary pain right now, not may, they are going through, but I can guarantee that a lot of them will come out of it much stronger and build truly remarkable companies. And you'll see some huge fintech companies going forward. We need fintech companies. India can't survive just on traditional finance. So fintech companies are very, very important for the ecosystem. And we have put our money where our mouth is by funding multiple fintech companies. And even though they're going through tough times right now, we believe in every one of those companies. And we believe that over the next couple of years, the better ones among those will break out to become companies that will return all of K Capital 1 or 2.
Got it. And what do you see for folks like, who are in the hairstylist, salon, massage kind of a business, and there have been plenty of them actually. I know in the US, it's kind of come to a virtual halt, and that employs a lot of people over there. And it's been growing in India as well.
So I think, again, it's totally underpenetrated, right? Where is the big chain of hairstylists has got 1,000, say, for example, you got Truefit and Hale and a couple of others run quite well, right? But the headroom is huge. All you need is a world-class entrepreneur to execute. So yes, there will be some pain right now. There is pain, right? But like I said, our goal is 12 years. So we find an entrepreneur who can execute and build a huge company. As long as we get reasonable equity for our first check, we'd be happy to fund such categories. Why not?
Perfect. There's an interesting question from a very interesting entrepreneur who does EV bikes. So he's saying, we suddenly see angels drying out. So is there a scope for people like you cutting the first checks now?
Like I mentioned, EV is not something we would not do, but unless we understand how much you need upfront, because a lot of times the initial capital required is more than our minimum threshold. And therefore, it becomes difficult for a firm like us to participate in a company like yours. Right. Otherwise, we believe in EV big time, and we would love to have seen a business like yours. But if you feel that 5 crore, 7 crore can move the needle for you, then you should reach out to us.
And what's your take on infotainment right now?
Example?
Uh, Maybe it's a gaming plus edutech based, like a Tata Teleservices having its content which is being thrown out now.
Yeah, I think again, big opportunity. You may notice I'm saying big for everything, but you tell me.
Mhm.
No one on this call can say that it's not a big opportunity.
Okay.
Huge opportunity.
Sorry. Go ahead.
See, all we're looking for, folks, if you really dumb it down, I'm doing this for 20 years,
Mhm.
is really world-class entrepreneurs going after very large markets. It's as simple as that. Many times we get the entrepreneur right, the market wrong. Like I said, you can sometimes break, think through, come back strong with the same founder, new market, and you build magic happens. The time we get the founder wrong, he or she can't execute. You can have the world's best, biggest market. You can have all the gyan you want. They can't get it done. So after all, we can go through multiple ideas on what works and what doesn't. This is the only two things that works. World-class founders finding product market fit in a huge market and executing. That's it. Everything else is history. It's easy. And in India, we're lucky to live in India because every single category. My father's an entrepreneur, started coming in 1981. He manufactures television, washing machines. He has his own brand, and penetration levels in his business are still 1% in some. Like he makes microwaves, is not even 1%. Washing machine is 8%. Studies showed that air conditioner market in India should have been 18 million by now. Indians buying air conditioners. It's only 5 million. So you can imagine old world categories like consumer electronics, where most of you probably have all these items. But you folks are not India, right? You all are elite Indians. Every one of you on this call. But so many people more need to buy air conditioners or washing machines. So there's opportunity everywhere, folks.
Thanks for that. And I also feel that entrepreneurs need to come to TiE to get the finishing school done, and that's going to help them further. Sorry for that little plug for TiE, but
You can start a TiE school for that.
yeah, we have a TiE Academy now for that. The next question is: are you seeing entrepreneurs come from tier 2 cities like Nasik, Aurangabad, Kolhapur? Do you invest in them?
If you ask me, we haven't invested enough, but honestly, I honestly believe they're the best. They're super hungry. In
Excellent.
fact, tier three,
Hmm.
right? Some of the best founders actually coming from these small towns. They want to prove a point. They work harder. I'm not demeaning anyone from tier one. I myself live in Mumbai, right?
Yeah,
And we funded many super successful, hardworking entrepreneurs in tier one cities. But I genuinely believe that some of these tier two, tier three entrepreneurs are, for whatever reason, are have more push. And we'd love to find more entrepreneurs. So if you are from those towns, whichever town they may be, it is irrelevant. Please do reach out to us.
okay. What's your take on property across the world and prop tech?
Prop tech is different from property.
I know.
Property, I lost money years back. I stopped buying any property years back, and I'm quite happy because getting out of property is so difficult. You can make money on good times, but not for me. Prop tech is, I think, a huge opportunity. Again, the standard prop tech companies have been funded, but even within prop tech, there's so many new business models that can come out, and we are open to them, and we are listening to ideas in prop tech. And if you have a good idea in prop tech that stands out from the current competition, we'll be more than happy to hear you out.
Excellent. I'm just going to take a little deviation over here and ask something which is very true to your personality, which is I about a couple of years ago, I don't know, 2 or 3 years ago, there was this big article where you said that you will not buy a first-hand luxury car. What's the thinking behind that, and is it because of your entrepreneurial mindset, or what's the story there?
No, no, no. I mean, it's just some rubbish story. But I remember coming back from college in the US, and my father is a very successful man, very rich man. So I said, "Hey, Dad, why don't we buy a Mercedes?" Some random comment as an 18-year-old kid or 19-year-old or whatever. He said, "It's a good idea. Let's buy it. Why don't you buy it?" So I said, "How will I buy it? I don't have the money." He said, "Why would I buy it for you? If you want to buy a Mercedes, buy it. But don't ask me." And I was maybe 20 years old at that time. I was in the middle of my college. And I finally bought the damn Mercedes when I was 40, and it was second hand. So I saw the value of my 20 years of effort to buy, and I didn't want the Merc. The Merc doesn't, I don't care about cars anymore. That was 20. But I bought it just to prove that, look, I worked 20 years to buy that damn second hand Merc. So better value it. Now, today at 48, by God's grace, maybe I can buy a brand new one, maybe. But I don't need it anymore. So why bother? And anyway, cars get depreciated as soon as they drive off the parking lot. So if you can get 10, 20, 30% off on a new car, and I'm not buying Mercedes Benzes anymore, even a Maruti, why not?
No, that's nice to know your mindset. That's really really helpful for entrepreneurs who are frugal or who need to be frugal, especially during these times. So I thought I'll just plug
I
that
was
in.
not frugal. at 20, but my dad made me frugal by saying, listen, do it.
He was getting you ready for your entrepreneurial line.
Yeah, that's right. Good parenting, I thought. That time I didn't think so, but now, of course.
Yeah. Okay, there's a question that had come up yesterday also in one of our webinars. They basically want to understand what's the best way to get in touch with an investor, and whether sending a cold email versus
It's a tough one. I always say come through a reference, but if you can't, feel free to write to us. Only thing is the direct email will be have to be much better because you get so many emails, folks. I answer every one, but the ones that come well referred, like for example Naveen, if he referred, I would take it far more seriously. So I prefer you come through a Naveen. But if you can't find the right Naveen, then what the hell? Write a great mail, and we'll be happy to respond. Why not? I'd even give my mobile number to someone if I like the idea good enough, enough.
and what's the average number of pitches or proposals or decks that you see in a month at KE?
This is no different from every VC fund. We get too many, that's a problem. And the reality is that we can't fund most of them. Most of them are not fundable. But a founder is a founder. He or she has to try. And that's our job to sift through that and find the ones that we think are right. They may be wrong. Yours may be right. So never take no as rejection. No is just one more person to move on to. So if K doesn't understand your business or I didn't understand your business, who cares about my opinion, right? You're the winner. I'm the loser. I missed out. Move on. And meet me at a party and we'll shake hands and I'll be happy for you. And I really mean it.
No, I also see during a lot of the TiE sessions and when we have investors and some of the great charter members talk with entrepreneurs, uh, the fact that these people tell them, hey, your business is not investable, don't waste your time. I've seen entrepreneurs maybe worried for a week, but that reality of saying, hey, listen, my business is not fundable. Let me just go and concentrate on my business and grow it, whatever, year on year, 20%, 25%. Those guys have turned out to be more successful than the guys who have had investable businesses and who have been.
It comes down to what you want in life. When my father started his first company, he realized that the business would probably not cross 50 crores because the market size was a certain size. And he felt that in his life, he wanted to build a bigger company than 50 crores. So he actually handed over the business to his partner free. He was a simple middle class person, right? It's not easy to do that. He sold the flat we lived in, used that as as seed capital, and then started his business, which today is a 1,000 crore company. So he could have easily been happy with the 50 crore business, but he decided to take that tough call that he'll hand over the business, which sounds ridiculous, but he did it. And in retrospect, the best decision he could have taken. On the other hand, there's nothing wrong with the 50 crore company. I think it's phenomenal. Even building a 1 crore company, believe me, is super hard. If anyone tells you a 50 crore company is small and rubbish, tell them to talk to me. You're a super achiever. But be happy that you're doing that. You decide. But you can't be in no man's land. My father was not happy. I remember meeting Mr. Sunil Mittal 20 or 30 years back. He came to my office to meet my uncle. And my uncle asked him, he said, but Sunil, you run so well, your company's doing well. He had BTEL phones, right? But he said, no, I'm not happy with that here. I want to build a much bigger company. And he did it, right? What is Bharti? I'm sure many people out here are using Airtel. It's a 50,000 crore market cap company, probably 75,000 crore market cap company. But he took the call. He had a successful company, but he still was not happy. He moved on to Airtel, and the rest is history.
And thanks for that answer, by the way. But the next question is, what do you see, or how do you see verticalized e-commerce growing, especially, say, people trying to sell jewelry?
There's very good opportunity. You've got some very good companies. Those companies are doing well. We have funded 1 or 2 vertical e-commerce companies. There was fear that Amazon would eat them up, but I won't mention their names. They're doing very well, extremely well.
And somebody's asking for a ballpark figure of the kind of equity percentage or stake that you guys take in KE.
From the entrepreneur?
Yeah.
50%. No, I'm just kidding. I know. Every deal is different. It's our business is more art in the early days. There's no numbers really, right? It's a little bit comp, little bit negotiation, little bit of song and dance, and we still haven't perfected that song and dance. 20 years doing it. It just has to be fair to both sides, and I think generally we try our best to be fair, and we partner with entrepreneurs who understand that and appreciate that, because it's a long journey. The last thing I want to do is take up too much equity and he or she feels cheated. Then how do you spend 20, 12 years with that person? It's not fair.
So what's the range?
Generally, in this business is between 15 to 30, more like 25.
Got it. The question that is going to be the toughest, Sasha. What's your take on tourism and travel industry now?
It's obviously, everyone knows, again, if anyone's in this industry, it's tough time. But I believe that it's going to bounce back. As human beings, we have to travel, we have to move. Silver Line is a fund that put money into Geo. Geo got lots of money, as everyone knows, in the last 2-3 weeks. So now people are confused about who's put money. But the first check was Facebook. The second check was actually Silver Line. And there's a guy called Egon Durban who put money into Twitter and several other companies. He has put $1 billion in Expedia last month. And then he put another billion in another very prominent travel company. I forgot the name. Will come back to me. So in my view, this is a temporary bump. The companies that can capitalize themselves, like Expedia did, will bounce back strong. And whether it be the Make My Trips or the Yatras, the Clear Trips, or whoever else is in this business, will you see TiE, which is a large travel company, today's FTO reading, they've cut 1/3 of their workforce as of this week. But they all will bounce back. Most of them, the ones that can have the cash situation. Because all of us want to travel. Who wants to sit in Bombay or in Delhi, right? We all want to travel. So 100% they'll bounce back, no doubt.
No, I think the millennials have got the travel bug. So,
of course. Even I'm an old man, but I want to travel, boss. So all of us will travel. Wherever it is, right? So, and like I said, I've fund the 12 years. So if an entrepreneur had a travel company today, they should happily come to visit us. If the entrepreneur fits our profile, we'll be happy to partner with Nimoha.
Thanks for that, Sasha. Next question. I'm going to twist the question and ask you, what do you see as the future for co-working spaces? How do you think they can actually, metamorphosize into something more useful than what they've just been providing?
Well, I guess time will tell whether these co-working places are relevant or not. But I feel my view is that the better run companies within the co-working space will have a bright future. And there's companies like Regis and stuff like that we don't talk about. We only talk about WeWork, right? Those have already been very well-run companies for years, but they were valued at 2 or 3 billion, and our friends have gone to 50 billion. So the whole spotlight had moved to WeWork. But Regis was always a well-run company at 2 or 3 billion, which is no shame to run a business worth 2 or 3 billion dollars. Right now, any business where you need to go out and sit there and work is under strife, right? Because it's not just co-working, but it's even the whole model of commercial real estate. Because many people are now going to start staying at home, so suddenly you'll have a situation where demand for commercial real estate, which is going through the roof globally. Companies are doing REITs and huge infrastructure money going into commercial real estate. So that's definitely going to come down over the next couple of years because people have realized they can work from home. So now, for example, one of my companies, we did a deal for like 4 floors, spending some ridiculous amount of money, which was only fair. That it was about a year back. 4 floors in a single facility, 20 crores rent a year. But I think we can make do with 2 or 3 floors going forward. We don't need the 4th floor. So imagine that real estate company loses the entire floor for one single company. So it's going to be a bit of a challenge going forward for sure.
And do you see the space of collaborative software and Slack and Evernote and folks like that?
Yeah, it's exploding. It's already exploded. You see that it'll just increase without a doubt. Everyone's using Slack right now. Everyone's using it. Collaborative software, well-run businesses, good ideas for sure. We have one company, I can't talk about it. Within that scheme of things, it's doing extremely well. They're actually getting customers as we speak versus losing customers.
Do you see more Indian players coming up with these kind of?
Of course. I mean, this company is Indian. I mean, the whole point is that, when you start the business, if you can start thinking global from day one, you don't have to have your first customer in California, but you can think product first global. Why can't you do it from India? When I used to work in my last job, we used to have all these Israeli companies. They used to go to the US, but not just with plain vanilla ideas, but even deep tech, all kinds of things. You see Mobileye, you see all these companies. 15 billion Intel bought it for. So I think India can build a deep tech company worth $1 billion, 5 billion, and then 10 billion. But you need one founder to do it. It's always about that, 4-minute mile. When Roger Bannister did it, a week later, even my grandmother could do it. But till then, even super athletes couldn't do it. It's all in the mind. So that's all bullshit.
Excellent. Do you invest only in a single founder company, or do you mandate that they have to have?
See, this is all canned answers.
Yeah.
Life is not canned. That's bullshit. The point is, we prefer well-rounded teams. Because we've seen our data tells us well-rounded teams, 2 to 3 founders. Over 2, 3 becomes too much. Certain age, those seem to work better. So we prefer that. But then if we can't make that the norm, right? Because we've seen some of our best companies are single founders who come in there and just hammer and get through. Or some are two, some are 4 and 5, and they still make it work because they're so mature that they work very well with each other. But generally it's 2 to 3 working in sync, which is the best.
Someone has asked you a question if you're a wildlife enthusiast.
Oh, I love it. The last trip my family and me went to Tadoba, which is for people in Mumbai. It's our flight, and my whole family was very worried because they were wearing masks, and I was like, "Come on, we have to do it," and it was just phenomenal because we saw so many tigers in that 2-day trip. So anyone hasn't gone to Tadoba, the first thing that happens post COVID, please do go. I was supposed to go again in May, which obviously is out of the question, but I've been to Africa multiple times. There were accidents in African forests where my balloon has crashed into Tanzania. But some of the best adventures of my life have been with wildlife.
I myself am a Ranthambore fan, so I run to it every time I get an opportunity.
It's the most relaxing thing on the planet. I love it.
Absolutely. So, there are plenty more questions, Sasha, but I'm going to again take a small break over here and ask a very interesting one. A lot of people, I think you guys don't know, but Sasha invested in Elon Musk. What's the story there?
No, I didn't. Let me explain that.
Okay.
So the story is there is I work for a firm called Nokia Ventures. I was India head. Okay. Nokia Ventures eventually changed the name to Blue Run Ventures. And my colleagues who invested in 1999 in PayPal. Okay. So technically I work for the firm that invested in PayPal.
You're being modest.
No, nothing like that. And that was a great success for us, but I think we could have made 100x more. We sold that for 1.6 billion. I think PayPal, as you know, the market cap is well over 100 billion. So we joke sometimes saying we sold too early. But it was because of my two colleagues. In fact, my managing partner, John Malloy, was on the board. If you ask Elon even today, he would say the best board member he had was John Malloy. Because John helped him so much in the early days. Form the strategy for what eventually became PayPal. Because it was two separate companies merged. You merged Peter Thiel and Elon together. You can imagine the madness. But it turned out to be amazing eventually.
So when are you getting him for TiEcon then?
Elon. Yeah, you guys can actually get him because such prominent people in the valley who I'm sure are all personal friends of his. So getting him can't be that difficult for your network. And you should get him because he's so controversial, but he's done so phenomenally well. You'll have 50,000 people sign up.
Yeah, he's only worried that his consumers will ask him when the first Model 3 car is going to come here. So
yeah, some of my friends have paid that $1,000 deposit. They're waiting keenly for those cars to show up.
A lot of our charter members have. So he's more worried that he'll have to field those questions than talk about entrepreneurship over here.
That's right.
So Sasha, I think I'm going to quickly run through a few more questions. I know you're hard pressed for time, and I've got still just about 90 more questions remaining right now. So don't worry, I'm going to break it into maybe a part 2. We could do it the next week again. Your take on the publishing sector?
Well, honestly, I don't have a take on publishing because, it's not a sector that we really spend too much time on. But there was one entrepreneur who had come to me. She had gone to school with me. And I remember encouraging her to get going. I won't mention her name now. But she's actually, within the last 3 years of me encouraging her to start. And obviously, I was not the only one who encouraged her. Many others did. She's done phenomenally well to the extent that she even published a book for one of my colleagues, which became a great success. So I feel publishing again is totally I keep telling prominent business friends of mine, please write books because, Indians are tired of reading about Americans and Europeans and Chinese people. There's so many successful Indian entrepreneurs and businessmen. We want to read about you guys and learn from you guys. So I keep encouraging all my friends who have done very well. And I'm glad to say that some of them actually listen. And some great books have been written in the last couple of years, but it's not even touching the tip of the iceberg on what we need to learn from our fellow Indians who have done so well. And I'm not even talking about Indians done well overseas. I'm talking about Indians in India who want to read. So it's huge.
There's one other interesting question here. I think this also comes because of the TiE network, Sasha. Somebody was asking you a question. Have you seen foreign entrepreneurs wanting to explore the Indian market and have you thinking of investing in them?
Yeah, of course. In fact, as we speak, just today we did a call with a team which is one in Indian, one was Chinese, and world class. And just last week we did the exact same thing. Another entrepreneur, where the Chinese entrepreneur was the CEO. Here it was two, at least there was one Indian, and we're taking both those deals very seriously because the quality of the teams are outstanding. So normally, to have a foreign come into India is very difficult. I remember passing on Zoom on Zipcar. Was it Zipcar with Greg Moran? I forgot. And I really found it to be great. But I said, how will an American do it in India? So I said, hey, buddy, and we passed. And see how well he's done. So it eventually, folks, comes down to the human being. If Greg had that attitude that I'm going to make this damn thing work, and he moved to India, he hasn't moved back to the US, he's run this business, and everyone knows how successful. Many of you may be users of his product, his service, which has done phenomenally well.
Oh, there have been plenty of questions on what have you learned from your experiences in the wildlife?
Patience. So I remember I went with a group of people to Kenya once, and we were waiting for the wildebeest to cross, and there were 14 cars in that place, and one by one, they were all CEOs of very, very large Indian companies. A group called YPO, which I'm a member of. So one by one, people getting frustrated left. Second one left. Third one left. Fourth one left. And I remember, I won't mention the name of the person, very prominent Indian businessman running a very large company. He was sitting in the front seat of the car. He said, folks, I don't want any argument from any of you. All of you A-type personalities, but I'm the boss. We're not moving till we see the damn wildebeest. And we said, okay, fine. And I remember people were in the bathroom, people are frustrated. But the beauty is, folks, the wildebeest came. And the wildebeest came and it passed by. And it was the most amazing sight of my life. Now, obviously, I want to go back to Kenya and see them again. But at least I won't die without seeing that. So you have to have patience. And in our business of venture capital, teaches you patience, because when you do invest in a company, it takes you 12 years to see any result. There'll be many ups, there'll be many downs. You can even have an IPO, but if you haven't exited your stock, you're still hanging on. So patience is very important. And wildlife teaches me patience, because I remember going to bench like 5 or 6 times and I didn't see a single tiger. And it was just so frustrating. I said, I just don't want to go again. But I went the 7th time or the 8th or whatever. And I saw 5 or 6 tigers on that trip. So wildlife teaches you that it's all there. The tiger is there, boss. But you have to be after it. You can't just show up and smile and tiger shows up, you take a picture and go home. Life's not like that. So I went for the 7th time and I saw 5 tigers. That's the happiest day of my life, at least that day, to see those beautiful, beautiful cats.
It's exactly like entrepreneurship.
Yeah.
You at least will need to fail 3-4 times before you get one big hit. So
yeah, I knew there's a tiger in there, and I just have to keep going to get it. Now it could be in the 8th time; it doesn't matter.
So, if you've not realized, Sasha, this was a big setup for the next question, which was: are you going to be interested in looking at pet care as a segment? And because of course now the lady who's asking is she's developing an app for pet wellness and grooming and stuff like that. So, what's your take on
Again, I'm sorry to answer this like a broken record, but the answer is yes, because why not? Pet care, I think, is finally there as an opportunity, because we had looked at a couple of pet care companies about 2 or 3 years back, and we had passed. And we just felt a little early, because pet care in the US is a huge market. But we feel now we haven't done enough work on it. So this will again fall into the opportunistic bucket, to be honest. But my first reaction is we would definitely want to study it and not just pass on it out of hand and say, sorry, it's too small a category, goodbye. We definitely want to study it. But there are other firms that have done work on it and would be interested in looking at it right off the bat. So the answer to that founder is you should be encouraged.
Great. So Sasha, I think the time is up. We've taken 10 minutes extra from you. I know you got a call, I guess, after this. Or could I go on with a couple more questions?
Just maybe 1 or 2 if you don't mind, because I'm sure other people are bored just hanging around. So we'll just finish 1 or 2 and be done with it.
Done. Again, I think I see a lot of questions repeating again. 1 second. The problem is, you need to
take your time to read.
There's a question from Tinaz on valuation technique for a fintech startup versus an existing fintech company. So again, Tinaz, this is not the question for today, it's for tomorrow.
Yeah.
So please,
ask Anand that tomorrow.
Yeah, Anand is pretty sharp in this. Yeah, the question is next on the retail tech side. What do you see there?
Yeah, so we actually invested in a very interesting company that broadly was in retail tech. There's a company called Find. Find started life as a company called ShopSense. Mm-hmm. And we used to have these screens in stores where you could actually go and check how you would look on the clothes you want to wear, the colors. Is that material even available? Is that pant even available in the store? it did very well, but we realized that B2B in India in those days was not happening. So we actually moved to retail tech and eventually became Find, O2O. And it did extremely well for us. And we sold that company for a large amount of money to Reliance last year.
Excellent. So I think Sasha,
one of my daughters just ran into the room right now. Like, so funny.
And my cat is going to pounce on the table, and he's he's an attention monger. So I'm just worried about that. Anyways, okay. I think Sasha, the last thing is, what's your piece of advice for entrepreneurs? How do you think they need to manage time now? If they have
Folks, there's no better time than now to start a business. I know it's tough times, but you will get a situation where you'll have everything, the DNA of companies is built in downtimes. So there's no better time because you will have a company culture that is frugal. You'll get your computer cheaper, you get your office cheaper, you'll get very high quality people to come join you on your mission for the next 10, 20 years of your lives. And you'll have high quality co-founders wanting to come with you. Of course, funding is going to be a little bit more difficult, but the good news is there's 5 or 6 billion. Yeah, okay. There's $5 or $6 billion of money available in the ecosystem. So the good news is that if you can just start now, or even do a reset of your life and say, okay, I've done what I have to do now, but I'm going to be a 3.0 and rebuild my business. And so it will be tough, but the companies that come out of this era, 100% you'll see some amazing companies come out of this era. And COVID has been even tougher than even previous depressions, whether it be 2008 or 2011, 2000, whatever. So it's going to be harder, but you'll see some amazing innovation and some fabulous companies come out. So I'm super excited. And as the Indian GDP increases, we'll have larger and larger companies come out of India, right? Because you see Alibaba in China is 500 billion, and so is Tencent. And Flipkart, our biggest company, was 17 billion. So you can see the gap. You can take that as cup half full or cup half full, empty. You choose. I believe an opportunity going from that 17 billion to whatever number you can put in your mind, right? Saying, can't an Indian company be 50 billion, for example? Why not? And I want to be part of that journey of that 50 billion story. And hopefully one person in this call is part of that story.
Thanks a ton, Sasha. It was a pleasure having you. And I think there are a lot many more questions that we've not been able to take an answer. So maybe in a week or 2 weeks' time, when things have changed and India has partially lifted up, we might come back to you and ask you all the questions and take your take on how to operationalize a few things then. And we would like to learn more from you then. Thanks.
Thank you, everyone. And thanks, Naveen, for your time this afternoon. Be safe, everyone. Thank you.
Thanks, everyone. And I know I've disappointed a few folks, but sorry, I can only pick and see what I can. But please do send us your emails. Happy to kind of answer them. Manu, send me an email. I'll get Sasha to answer your question. Thanks a ton. See you guys. Bye. Stay safe. And tomorrow's sessions and the forthcoming sessions, Rahul, can you just please put up that screen?
We are doing a thank you mail after this, so we'll mail it to everyone. So
okay. Thanks a ton, guys. Manu, do write your email. Don't be disappointed. You're an entrepreneur. You need to jugaad yourself and get your answers. Thanks a lot. Bye-bye.